What is up, everybody? Lyle No Hippie Trucking and Transportation. I am coming at you from the Workman Travel Plaza, Lowell, Arkansas, I-49, exit 78. Just chilling. Wanted to talk about some of these credit score changes that look to be coming down the pike, which I know are going to affect a lot of people. What's up, Afro Phoenix? Myth Leather Company, what's going on? Golden Boy Expert, what's up? Matter of fact, hold on. Let me get this other phone fired up because it's hard for me to see these comments, especially with the sun in my eyes right now. All right, so I just decided to do this video as a live just in case there were any questions. That pop up. I'm gonna see if some people come in here. Credit and credit scores may not be a hot topic to talk about, so not sure if anybody's gonna be in here for this one. It's cold in the street in these Nebraska streets. Man, I'm gonna tell you. You know, I can usually tell how my run's gonna go within my first couple loads out of the house. And one thing I could say about this is I'm liking the runs I've been on, the lanes I've been in. Haven't really had to really get into that northeast that much. I mean, I did get in and out of there a couple times, but not like really, really northeast. I haven't been killing it as far as money goes. I mean, I'm still doing all right, but just not up to what I'm used to seeing personally. But I haven't been in a lot of places I don't like going. My hours got pretty thin. And one thing before I get into this credit topic, you know, I did this video about home time off with truckers, and somebody said, well, if you take a 34 off every week, man, if you take 34s off at Prime Inc., you're not doing it right, because they're gonna find a load with your hours. I'm just telling you. I was down to like 6 hours on my 70-hour clock the other day. What did I do? Boom, got a load where I deadheaded 200 miles, dropped off 90 miles, fit in my clock. So I've been kind of running these lanes. I kind of like, you know, that load I did yesterday was from Stillwell, Stillwell, Oklahoma to Clarksville, Arkansas. Then I got this load picking up tomorrow. So I was needing a day off. Well, I was a little tired. So I pick up tomorrow at 7 o'clock in Rogers, Arkansas, and take that out to Charlotte, North Carolina. I was looking at the routes, man, and normally I would take that route going straight across 40 and either, you know, staying on 40 all the way in or taking 77 up. But I'm looking at it and I'm like, I'm going to take the southern route. I'm going to take, instead of taking 40 all the way across, I'm going to take 40 to Memphis. Boom, cut down 22. 22 is going to turn into 78, take that down into 20 into Georgia, and then kind of go up that route. A much better route, more parking options, stuff like that. So anyway, I'm about to get into this Man, it doesn't look like anybody wants to talk about this credit stuff. I might have to do a regular video on this shit. What's 40,000 pounds, 20 degrees, Kansas City, Missouri to Denver pay? I don't know, but a lot of loads pay good going into Denver. I'm going to tell you, if you're ever in like the Iowa area and you get a load going to Denver, those loads are usually going to pay $1,700 to $2,200, something like that, for like how many miles it would be. I know they have one coming out of Denison, Iowa, going to Denver. I would imagine it'd be pretty good. All right, so let's talk about this credit. All right, so those of you guys that have been watching my channel know I used to be in banking and used to be in mortgages, and the way traditional credit used to be ran or looked at was kind of like a 30-day snapshot in a way. So, for example, if I know I'm about to buy a house, maybe 2 months out, I might start paying off a bunch of credit, getting my score up and things like that. Well, things have kind of been changing already, where they're more or less looking at a trend than a snapshot, right? And you would typically have the three bureaus, Equifax, TransUnion, and Equifax. And generally, a lot of mortgage bankers would use all three bureaus, and then they would use the middle score for them three bureaus. Banks might use their own, not their own credit score, but they may choose to just run off of one system. But anyway, let's talk about the guidance that just got sent over from the owner of this mortgage company I used to work at. So I'm going to kind of just be reading through some of this. So essentially what I'm reading is, see, here's the problem. I get into trucking and all of a sudden I'm wondering if it's just old age or what, but sometimes I find myself just reaching for words that I used to use all the time. But anyway, Jesus, I need to start talking to some smarter people. Terry, I'm gonna have to start talking to you more. But anyway, so basically this stuff was sent over. So basically it says traditional credit report data would only use payment history, utilization, balances, and inquiries to come up with credit scores. Now what's going to start changing is they're going to start looking at income deposits, spending patterns, overdrafts, recurring bills, alternative data from Clarity Services and non-traditional lenders. So those might be like payday advance places, stuff like that. A lot of times we could use stuff like that if somebody let's say they got a loan for like some bullshit that didn't report to credit. We could maybe call that company and get a non-traditional, get it added to the credit report non-traditionally. Anyway, so now what's going to be happening is, and this isn't necessarily all the credit bureaus, right? But in this one particular case, they're going to be looking at trended data, 24 months of behavior, not just snapshots. So they're going to basically look at how you've been managing your credit and stuff like that. We'll get a little deeper here in a second. This is just kind of the overview of it. So it's going to be looking at a 24-month snapshot. So that changes a lot. The reason why they're coming up with this is there's a lot of young people out there, especially that have high credit scores with really nothing behind it. They ended up just not doing anything wrong. They might have just had one credit card with a $500 balance, and then boom, they have like a 700 credit score. So they came up with this because there are millions of people that have thin files or inconsistent credit history. So this is going to kind of combat that. Lenders want deeper insight into real life cash flow behavior. this is going to get a little bit deeper here in a second. Experian claims a 40% improvement in predicting credit risk compared to traditional models. We're going to get a little bit deeper coming up here. All right, this is going to be used for personal loans, credit cards, auto loans, HELOCs, mortgages, and lines of credit. So basically, just about every way you could get credit out there. What it's going to do for the lenders is it's going to help them to see real income consistency. So here's what. So a lot of times you go buy a car. If you have like a 700, maybe even like a 680 credit score or higher, pretty much all you have to do is tell them, here's how much I make. They're not going and pulling bank statements or anything like that. Usually if your credit score is high enough, they're not going to verify that. So you could almost tell them whatever you want to tell them. This is going to kind of get in the way of that potentially, because if they're able to see all this bank account information, that changes things up a bit. And we'll get into how this could affect me coming up here in a second. Another benefit it's going to help lenders with is to see how people manage their checking and savings accounts and whether the spending matches the income, and if someone is trending up or trending down financially. So before, credit score was never based on income at all. It was all just based on credit history, how long you've had it, your usage, all that kind of stuff. This kind of throws a pretty big wrench in it. All right, so what does this mean for consumers? Your bank account behavior now matters. We'll get into, like I said, how this can affect a lot of people. Overdraft, bounce payments, inconsistent balances can hurt your approval odds. Strong cash flow can help someone with a thin credit or recovering credit file. People who improve their habits over time will look better under trended data. All right, so who does this benefit most? First-time home buyers with limited credit history, people rebuilding after collections, charge-offs, high-income earners with bad credit but strong cash flow, and customers using non-traditional financial services. All right, here's where it kind of gets into the trucking industry and realtors and any commission type people and stuff like that. People with unstable or inconsistent bank balances. This is who it could hurt. Again, people with unstable or inconsistent bank balances. All right, so how that can affect truck drivers, mortgage bankers, car salespeople, stuff like that, is there's a lot of fluctuation in your bank accounts and stuff like that, right? Some months, maybe not so much in trucking, it's pretty level in trucking, but there were times in the mortgage industry when I could have a $35,000 month, and then the month after that have $2,000, the month after that $6,000, the month after that $0, the next month $14,000. So I think it hurts those people. Where it might hurt me now or anybody is they keep saying that they're going to be able to see banking information. Are they going to be able to look at business? Are they going to be able to look at the business account that's attached to that account? So, for example, if they're saying they're looking at what's going on in your bank account, if they're only looking at my personal bank account, they're not going to see a bunch of money in there. I'm usually going to have my money in my business account, and then I'll roll over what I need to pay and stuff like that. So now I'm wondering if I'm going to have to start, and I keep the money in the emergency fund. So I'm not showing, even if they do check my bank, my business bank account, they're still not seeing that $1,300 a week that I'm setting aside outside of everything hitting my bank account. Other people it might hurt are people who heavily rely on overdraft protection and customers who only fix their credit right before applying. So again, you're not going to be able to do those quick credit fixes like you used to. And here's one thing that's outside of this, that before all this stuff came out, I was talking to my old boss, and he was saying that a lot of people were getting, this is why the theory, because there used to be a truck driver out there, he used to do a lot of lives and stuff like that, and what he used to talk about was having $100,000 in credit and all this kind of stuff. Now they are closing people's down credit. They're closing down people's credit like midstream. You know, there are people that have had a line of credit for $30,000. Next thing you know, they might have $4,000 on it. They shut it all the way down to $4,000. Credit cards are getting closed. I had this happen to me a couple of years ago. I had a credit card that I never really used, and they just shut it down. So banks are starting to do that. They're starting to shut down people's credit lines, especially if they're maintaining high balances on accounts, or if they're not using them. So just the other day, I have a line of credit. I moved $300 into my account, just let it sit there a day, then paid it off just to get some usage out of it. I have another credit card that I don't use, and I'm going to throw some money on that just to get that activated. All right. What lenders will now see? They're going to get to see your average monthly income. Now, if they're basing that off of pure deposits, I don't know how they're going to do this. But that seems like the only way that they would be able to do that without actually having you provide that income. Average daily balances. Again, somebody like me or a lot of people might get punished if they don't keep a lot of money in their personal bank accounts. If you have a lot of overdrafts, they're going to be able to see, they're going to be scoring on that, which they never really did before. And reoccurring bills, whether they're paid on time or not. So now we're talking about, I don't know what bills that they're talking about. But here you go. How much discretionary money is left over after paying bills? So they're going to be basically looking at average daily balances, your average daily balance, which they never used to look into. And then they're going to be looking at 24-month credit trends. Are they getting better or are they getting worse? So things that they're telling their clients to do to prepare. A lot of times you don't get this chance, but sometimes people will come to you 3 months in advance and say, I'm looking to get a house, can you give me pre-approved? So what they're saying is keep at least 1 month of expenses in your checking account, avoid overdrafts for 90 days minimum, pay bills from one primary account to show stability, reduce unnecessary subscriptions and fees, show consistent deposits, especially if self-employed. This goes out to a lot of lease drivers out there. Build at least 2 to 3 positive accounts if your credit file is thin. Track your trended utilization for the next 90 days. So and then basically it's just banks have been getting burned, right? That's the main reason for this. So they're saying that underwriting is shifting away from one static credit score. Cash flow behavior is becoming a key approval factor. This model may become standard across lenders in 2025, 2026. Now, I know it hasn't gone in place yet. Consumers need to prepare the risk of being left behind. So essentially, that's kind of what's going to be going on. Let me know if you can hear me. I'm about to turn this air on because this phone is getting hot. But Let me know if you can hear me once I turn this on. So I think this is going to be a big wrinkle. All right, son of Atlas 1372. Have I ever dealt with high income and bad credit? Yeah, I used to deal with that. Not a lot, but normally high income, usually they're paying bills pretty consistently. I've dealt with athletes that have high income with bad credit, but it's sloppy bad credit. It's like not paying attention, like just not paying bills on time, or they got the money in the bank to have made the payment, but they're just sloppy with it. I've dealt with that. What's up, Neptune 8? Yeah, I'm trying to get back to doing videos. This was supposed to be a video. All right, Son of Atlas is going to be tough for truck drivers. It could be now. They've come out with these guidances before, and they really haven't gone into effect fully. I don't know how they're going to be able to see bank balances or any of that kind of stuff. I mean, obviously, in this day and age, they can get that information, but I would think that some information like that might, like you'd have to sign some kind of you'd have to sign something giving them access to that. I would think. I don't know. All right, is this to keep the 2008 crisis from happening again? What has been happening a lot lately, from what I've been hearing, is it's not the housing market that's having the problems now. It's the car market. So if you remember back to COVID, people are in dealerships are paying the price for this right now. But they were selling cars for like $30,000 above sticker price and doing all this crazy stuff. I'm hearing that they're doing like 96, 100 month, plus month car loans and stuff like that. So if you're buying a car, even let's say on a 72 month loan, if you're buying a new car, let's say it's these car prices are crazy. Let's say you buy a car for $50,000. You take it home, boom, now it's worth $49,000 right off the bat. 3 years goes by, you still owe more on the car than it's worth. Something happens to the car. I mean, the car market is taking a killing. There's a big subprime car finance or financial. It's a subprime auto finance company called Tricolor. I've never heard of them, but they just went out of business. So a lot of this is driven off the car market, more so than the mortgage market right now. So something like that. All right, King 1783, I would think they would check savings and assets. Well, if you're going to do a mortgage, typically, and this isn't always either, they're going to check that. So in the mortgage industry, let's say you came to me, you said, Lyle, I want to buy a house. I'm like, great, let's go ahead and start the loan. I put your information in, hit enter. 15 seconds later or 30 seconds later, I got an automated approval, come back, and it says, here's what you need. You need, it'll just basically spell it out. 2 months bank statements, 2 years tax, W-2s, 2 months bank statements, whatever it is. Sometimes if the person's strong enough, they don't even ask for that. So and these aren't subprime loans. Now they would have probably had to have had a mortgage before, excellent credit, all that kind of stuff. But I could essentially submit a credit package to a bank with just driver's license, insurance information, uh, where they work, maybe shit. I mean, it could be super thin, or most of the average person's going to have to provide their own bank statement. So they always kind of did check that, but the difference is, let's say somebody wanted to come to me and buy a house, and we say, you know what, we need 2 months of mortgage reserves after you put your down payment. Well, they might be, well, I don't have that money. Well, their parents could park $10,000 in their bank and let it sit there for 2 months, and the lender's not any the wiser. Now with this, if they're able to see what the trend is over 24 months, they're going to see this big increase that came into the bank account 2 months ago, and then they're going to ask for an explanation on that. So, yeah. (412), I thought you might have been home, man. I had a chance to sit down and relax last night, man. I delivered at that Walmart in Clarksville, and I was fucking with my clock last night to make sure that I didn't get a load too soon. So I left the Walmart, got parked up, went off duty for a while, and then I let like an hour go by, and my 14-hour clock was about to run out. So I went on duty for a second and then off duty. So my 10 hours would start from then. I was tired, man. I've been running. I was down like 6 hours, or I was down to like 4 hours on my 70 last night. All right, 412 is talking about car prices. Man, I'm telling you, these car prices are ridiculous. There is no way I'm spending. I'm not even spending $20,000 for a car, let alone 50 and 60 and up. I mean, I remember back in the day, if you were buying a F-150, or even like a F-350, you might have been $33,000 or something like that. All right, Neptune 8 bought a new car a month ago, and the dealer told me they could extend my payments to 96 months. I think a lot of that long-term finance is going to be going away here pretty soon too. But they need to move the car, so there's always going to be a way for people to buy shit. These cars aren't just going to be sitting around. So whether it's I don't know. All right, Myth Leather Company, the 08 shit isn't ever happening at that scale again. That was a pretty damn scary time back in 08. I mean, I just remember driving around, and you would have like, let's say you had like 10 houses in a cul-de-sac. 4 of those houses might have for sale signs on it for short sales, stuff like that. Interest only, stated income is a no-go. Yeah, it's a no-go as far as houses go, but stated income as far as cars and credit cards and personal loans and stuff like that, that's been like that a long time. Now, I don't know if this new credit model is gonna kind of change that, but even now they don't call them stated loans because they're government products, but they still have loans where the bank's not asking for income information. As long as the system gives it a, I've been out of the business too long, I don't even remember what they call it now. As long as they give it, fuck. There are still some people out there that are getting approvals where they don't have to provide income documentation. Oh, 412 is going to be home until the 1st. All right, man, chill out. Have a good time at home. I cannot wait to get back home. Neptune 8, could you do a video sometime about winter driving tips? I'm going to be starting up soon with Schneider. Man, if you're new, man, there should be a trainer out there. I'm going to tell you, I was just talking about this with somebody on the phone today, and I never really talk about this in a regular video because I don't want to go against what some companies are saying not to do. But I will tend to use my Jake brakes in the snow or stuff like that. But I don't really talk about it because I know that that's something that they don't really want to be used. To me, I mean, I'm just going to talk about this. This video is not about that. But if you're going down a slight downgrade in the snow, if you step on your foot pedal brake and your Jakes at the same time, your truck and trailer is going to be the same speed. If you let up off of that foot brake, truck and trailer should be at the same speed to some degree. I don't know. I don't know if I have that many winter driving tips. Steelers lost. I'm mad as fuck. I'm about to go back to sleep. That's another thing. And now that I got old, I don't even worry about football before. I used to be serious about some football back in the day. 96-month loan is definitely too damn long. What do you think about 50-year mortgage? I don't think a 50-year mortgage would really help. 50-year mortgage, they have 40-year mortgages right now, right? The problem is, if it's a 50-year mortgage, typically the interest rates are going to be based off of risk. So the interest rates are going to be higher. So the loan term could be longer, but the payment may not be that much less. So you're just stringing out the agony at that point. I think there's other ways to do it. I think if you were to take out an adjustable mortgage that was a little bit more long-term, if they came up with a product like that, not necessarily the 3, 5, and 7-year adjustables, maybe if they had like a 10 and 15-year adjustment term, I think that would be better than a 50-year mortgage. Because most people aren't going to be in a house more than, I think, what is it, 7 years is the average. Somebody's going to be in a house. So if it's a 10 or 15-year adjustable, I mean, I think there's a bunch of different ways. I don't think the 50-year would be the best way to go. All right, Myth Leather Company, use chains to get out of trouble, not to get into trouble. Definitely. I have auto socks in my truck. I got like 8 pair on this truck right now. And the reason I got 8 pair on here is because if I ever have to use them, I don't plan on storing them. Like, I plan on using them and just kind of tossing them if I ever have to use them. But I don't plan on using them. There have been times when I thought about using them, like when I was stuck in a truck stop, but I have a shovel back here, like a full-size shovel, and I was just able to shovel my way out. So this guy is really trying to fuck up his oil pan over here. He's backing into this spot, but he's going over the scale. Like, he's not going straight over the scale, but kind of the other way. And you know how some of them scales got a high curb on it. He was lucky he was at the sloped end of it, because if he would have been higher on that thing over there and dropped down, he could have jacked up his oil pan. All right. Oh, you know one good thing about Schneider, now that we're talking about Schneider? I was stuck in, I forget where I was on I-72 somewhere in Illinois. It might have been last year when there was a big ass blizzard, cold spell, all that stuff. Schneider put out a blanket message to all the drivers in that area to shut down. I think that's smart. I think that I wouldn't mind if my company did that. Why? Because it takes the stress off the driver. Yeah, Schneider driver told me that because I'd walked inside to grab something. He was in there and he was talking to some other driver in there. He said, yeah, Schneider told everybody to shut down. I was like, man. All right. I know keeping extra def in the truck and de-icer. I don't have de-icer. I use the alcohol. I know they talk about not using alcohol, but fuck. How much shit am I going to carry on here? They up here talking about you need to have some what do they call that shit? Like some I forget what the hell they called it. Because the alcohol will do something to the rubber and this other stuff will condition it. Listen, I can only carry so much shit. So alcohol has a multi-purpose. First, if I put it in this, if I can get out here and squirt. All right, so I got this in a bottle, then I got the other bottles. If my windshield starts getting froze, I can squirt my windshield wipers down, get the ice off that. Then when it snows outside, a lot of times you get ice on your steps. Boom. 90% alcohol does great on steps. Spray down your steps, let that shit marinate. When you come out, you can kick the ice right off of it. If your brakes are froze, throw that shit in your air lines and push that alcohol back there. It may not condition your lines, but I mean, really. Same thing with if your windshield wiper freezes up, throw some alcohol in there. Even I've had the -30 shit freeze up on me, so yeah. So as far as winter goes, I keep anti-gel. I keep def, anti-gel, def, a shower, not a shower, a shovel, alcohol. I don't know if I mentioned that. Oh, ice melt, and that's really it. All right, get a 30-year and make 1 or 2 extra payments a year. That'll cut off years of my loan. Yeah, that'll usually, I think that cuts off, I think making that extra payment a year and doing it bi-weekly cuts off forgot how many years it was, 7.5 years or something like that. I haven't been doing that so much on my mortgage because I've been trying to stack up money in that brokerage account. That's my main priority right now. All right, Pokerhead 1776. The math comes out to paying double the interest if carried the full 50 years. I mean, I don't think anybody would ever make the final payment on a 50-year mortgage, but that is crazy. I mean, for the most part, the way I always looked at it with mortgages is I'm riding out the payment. And hoping, now this depends on where you live at. ride out the payment and hope that the value increases enough to that's where the money's made. The difference between the payoff and the home value. Some of these parts of the country, you can get stuck in a mortgage pretty quick. If you're not in an area where houses go up in value and you're doing a long ass loan like that, by the time you start paying down the interest on it, you could be you could be 4 years down the line and really not have paid nothing down on the house. Pretty much. All right. Goddamn. I'm behind. Man, I can't see these damn comments. What's the new credit model? You'd have to go back to the beginning of this. I forgot what they're calling it. But basically, they're going to be factoring in bank account balances and average daily balances and stuff that they never really factored into credit scoring before. All right, 3752. I could burn through a 70-hour clock in 6 days with long loads, doing 4,000 miles and get a 34 before I've ever gotten to a recap. See, that's different if you're running. I talk to people all the time that run those kind of loads. So there are differences between the way Prime will do things and other companies will do things. If I was in a company that always had like long freight, like if I was going from Florida to California, you can run yourself out of hours doing that. But at Prime, they will always have a load for you to match your hours. It's happened to me. It happened to one of my boys the other day. He thinks he's about to get chilling. He's got like 3 hours on a 70 or 6 or whatever it was. He's parked at a truck stop about to relax, thinking he's not getting nothing till the next day. Boom, they slam something on him. They will find a load. You could be sitting there literally with 2 hours on your clock and might be getting back like, let's say 6 or 7 hours at midnight. And they will find a load that will pick up within 60 miles or something like that. And you be able to shut down until your hours come back. And then it might just be a 300-mile load or 200-mile load. In my case, last night or the day before, it was a 90-mile load. So if you're running out of hours, I think people at Prime that take recaps take them because they want it, not because they're necessarily forced to, or just because they don't have any loads and you might sit for a while. I've had that happen where, not that there wasn't a load, but I was waiting on a load so long I ended up getting a 34. I always wanted to buy those heated windshield wipers. Yeah, I think that's a bit much. If I was going to spend some money, I have thought about those auto chains before, but those things are expensive. CRST International here, 10 years. Used to see a lot more information about CRST on YouTube a while ago. I haven't seen much on there lately. Slime Pack is at home eating Sunday dinner. That's what I'm talking about. I'm going to be in your neck of the woods here in a couple days, delivering in Charlotte. And hey, Slime Pack, I am coming. Most people, even myself, usually I would take 40 all the way across, and then I'd either just keep going on 40 and then get into Charlotte that way. But I'm going to be taking I'm taking the long, or it's not, it's like 10 miles longer. And a lot of people, even myself, would have avoid it because it's going into Atlanta. But I'm taking 40 to 78 to 22 to 20, and then going around Atlanta there, and then up to Charlotte that way. I just think there's better truck parking along that route. And I'm not sure what the weather's going to be like. I mean, I could look it up, but uh, if we're supposed to be getting a cold snap coming through, I think not dicking around with them North Carolina mountains might be a better way to go. And listen, sometimes you just do shit just because it's less stress. So that's how I'm going to get there. Outside of having to deal with a little, just think about how peaceful that drive is. I'm not dealing with Nashville, uh, Memphis. Well, I guess I am going through Memphis. Uh, I'm not dealing with Nashville anyway. Uh, but taking that 78, 22, all that, that's like one of the most peaceful drives in the country right there. I deal with maybe a little bit of a headache when I get down into the Atlanta area, but when I start going up from there, it's back peaceful again. Plus, there's parking along that whole way. I do not like them truck stops that are up in that like Eastern Tennessee, North Carolina area. Anyway. Looking Bear 427. If we had to chain, we didn't run. Yeah, I am not. I'm not one to be chaining. All right, man. Bear Rabbit, have a good night. Best small tool I ever bought for my truck was a tandem stopper. I had one of those. I gave those away to a new driver, Pokerhead. Them tandem stoppers. I just got so good at slide the tandems. Like, I don't even. It really takes me about a minute, 2 minutes to dial my tandems in right off the bat. I remember when I first got out here, I was like going back and forth and couldn't find. Like, I've got that down now. That tandem stopper ended up being more of a hindrance once. I think I may have only used it like 10 times too. I forgot who I gave that shit to. Ah. All right, so anyway, I did get a little bit into that credit stuff. I might post the. I don't know if I can post the stuff that was sent to me on my community page where it would actually make sense. I might look into doing that so you can see it, but you can. I'm sure there's got to be some information on the internet about the new credit model. Like I said, for a lot of people, it's going to be better. I just think it might change the way I do things as far as my business account goes. I may not just have that money sitting in that. I might not have that money sitting in my emergency fund because the bank doesn't know that money's sitting there, potentially. And I don't know, I might end up having to quit the bank that I've been with for 30 years or however long it's been and move to a bank like that's affiliated with my brokerage account. So maybe that, I don't know. Yeah, Slime Pack. If you want to see what that route is, just type in like, if you just Google, as a matter of fact, let me take a look at it so I can talk a little bit more cleverly. That's one thing I can say, that I don't think as a truck driver, I'm better than I was 2 years ago from driving the truck or doing the job or anything like that. But I think my trip planning, and not necessarily better as far as miles and stuff like that go, I am just far better at trip planning and taking routes that I want to take, more so than I was before. Before I used to just go. Now I'm all about the ease of the route. You know, all right, so this route that I'm gonna be taking to Charlotte. All right, so before, the normal route would be, I'm gonna hit Little Rock, Arkansas. I'm gonna hit Memphis, which I'm gonna hit either way. Nashville, I'm gonna hit Knoxville, Asheville, fucking with the mountains up there. Probably in the middle of the night. So that's that route. Then Charlotte. This next route, boom, I hit Little Rock, Memphis, go down to Birmingham, which could be a little challenging at times, Atlanta, and then once I make it out of Atlanta, it's like coasting all the way up to Charlotte. But what I'm looking at is that route between Memphis and Birmingham is so peaceful. And then from Atlanta up to Charlotte, until you get closer to Charlotte, that's peaceful. And it's like 10 miles longer. Let's see, all right, Night Rider. I heard in Canada you have to refinance every 5 years. I don't know much about Canadian mortgages. If we'd have been speaking about this a few years ago, I think I might have known a little bit better. I'm not sure if they have to refinance every year. I just don't think they have 30-year mortgages that are fixed in Canada or something along those lines. And I don't know if Myth Leather Company's in here. I did have an interest-only loan on my condo, and that actually worked out pretty well. But I don't think that's the right loan for everybody. Essentially, that condo or that townhouse I just had a big ass line of credit on it, and I could either use the available money if I needed to use it, or I could just make an interest-only payment. I think that works well for the right person, especially if the intention is not to pay off the house through paying off the mortgage. All right, well, I'm about to get off here. I just wanted to let everybody know that. Look up that information online. There's got to be something out there about it. Just type in like new credit score model 2026 or something like that, and you'll probably be able to bring that information up if you're interested in that. Anyway, I do appreciate you guys stopping by. No Hippie Truck and Transportation. I'm out.